our chairman of the branch, CA Macharva Minavalli, sir, to kindly give the welcome address.
Yeah, thank you, Deepak. Thank you so much. And respected senior professional colleagues and all friends, and all the delegates, warm welcome to the third day of the webinar and very good evening. Friends, yesterday as we discussed, there are 5 parts in the IBC code, and first part, Revati ma'am already discussed a few sections. That is nothing but a definition in preliminary and definition part 1. And part 2, madam has started corporate insolvency resolution process. That is CERP madam has started. She has taken up to section 32. 33, 34 also just she has introduced. But today Anita ma'am is going to take a liquidation portion. That is from 33. And yesterday Ritesh Metal has taken part 3. That is nothing but individual and partnership firms. Part 4 is talking about administration, board, IBBA, board, IP insolvency, professional IPA, and IU, investigation, audit, etc. And part 5 is talking about miscellaneous. There were 2 very important sections, very important parts are part 2 and part 3, which are talking about CERP, liquidation, and both individuals and firms and corporate insolvency resolution process. So, with a brief, without wasting much of your time, I request the secretary to initiate the further process and request our speaker to start the process.
Thank you, Chairman sir.
Yes.
May I now request SICASA Chairman CA HCS Reddy to give the introduction of CA Anita ma'am.
Thank you, Vice Chairman sir. It's my pleasure to introduce today's speaker, CA S. Anita. Professional qualification. Fellow member of the Institute of Chartered Accountants of India since 2005. Associate member of Institute of Company Secretary of India since 2001. Associate member of the Institute Cost and Works Accounting of India since 2005. Diploma in Information System Audit since 2005. Certified Information System Audit since 2011. Certified Ethical Hacker since 2015. Master of Law from Madras University since 2015. Insolvency Professional since 2017. Registered Valuer since 2019. Completed the certified course on prevention of anti-money laundering conducted by ICI in 2019. Completed the certified course on fraud accounting and fraud detection by ICI since 2019. Cleared the Independence Director exam in 2020. Completed the certified course on alternative dispute resolution conducted by ICI 2020. Completed the certified course in Ind AS conducted by ICI 2020-21. And Bachelor of Mathematics from University of Madras, Master of Finance from Indian Institute of Finance. These are the professional qualifications. And coming to the skills and experience. Possesses 2 decades years of experience as an auditor, execute the jobs of various audits and attestation services both in India and abroad. Having in-depth knowledge and experience in income tax law and practice. Done various audit of banks, that is statutory audit, revenue audit, stock and other audits. Done review and viability audit assignments, SIDBI on SIC SSI unit for audit 2000 units in Tamil Nadu. Having in-depth knowledge and experience in company law and practice. Handled audit of wide range of enterprises from individual to corporate, including HUF trust, including advisory services. Handling right issue and offer for sale. Hands-on experience in system audit and configuration of management audit. Currently faculty of Madras of CA and CS Institute on imparting knowledge in insolvency and bankruptcy code 2016. Currently faculty member of CA, CS and CW Institute on imparting knowledge in valuation. Advising insolvency professionals on filing and presentation before NCLT and NCLAT, and currently doing assignments as a resolution professional and regulator. And these are a brief profile about today's speaker, CAS Anita. Over to today's speaker, Anita Madam.
Thank you very much.
Anita
And
ma'am,
thank
with
you very
your
much.
permission.
Yeah.
Anita ma'am, with your permission.
Yes.
Dear friends, Anita ma'am is an excellent speaker. Actually, ma'am and myself has discussed about this program 6 months back. Luckily, now we could able to organize this. And thank you, ma'am. Thanks for accepting our invitation and being here for sharing your knowledge. And madam, style of teaching is no PPT. And please maintain a book and pen. And I would like to share, I'm one of the first students of IBC batch of Anita ma'am in Hyderabad. We were the almost 60, 70 members. And I have to share you almost 60, 70 members cleared the examination with the help of Sri Priya ma'am and Anita ma'am. Thank you. Thank you so much, Anita ma'am. Now, screen is yours.
Thank you. Thank you very much. Friends, let me tell you very clearly, as he has rightly pointed out, this session, once it's going to be completed, I want everybody should be thorough on the timelines. What are the functions? What are the duties of the liquidator, IRP, RP, and what are the offenses and penalties? So I know pretty well, they have said very clearly, there are certain insolvency professionals are also attending the program. So my target first is like to refresh everybody what is the timeline for the entire portion, and also going to give you as and when required what are the practical side, what are the refreshment side. Both sides I'm going to cover. I just give you 2 minutes for everybody who are new to this particular area. Please take a pen and paper, because I'm just going to use the Word document as my blackboard, and you are supposed to write it down yourself, because 3 things involved here. Number 1, if you are going to write down, you are definitely going to have the knowledge. Number 2, you are certainly going to be thorough. Number 3, you will be confident enough to do the entire chapter by yourself. What is much more important is this particular area, you cannot do it alone. There should be a team of members, because compliances are more, understanding is more, and you have to do a clear-cut job decision, and you have to be one step ahead of everybody, which means you should be above the COC. All these things will come provided if you understand the subject thoroughly. So let's get into the subject. I just would like to go from the CIR. If you are not able to see any of my writings and other things, please tell me so that I will explain to you easily. So CIRP, what does it mean? Corporate Insolvency Resolution Process, which you have attended the class in the first class. So I just want to take a 5 minutes of time on CIRP, on the timelines to understand you. Then I will immediately go into liquidation, voluntary liquidation, offenses and penalties, some of the miscellaneous chapters. Then I will also discuss the experience. I will also ask somebody to share their experience also. Now everybody, I understand that, able to see this particular Word document. So let's proceed with that. In CIRP, you are filing an application. Moment application is filed, is it clear?
Yes,
Madam,
madam.
clear, very clear.
Okay. Moment you are going to file an application, this will be decided as per the code 14 days. But if you look into the practical side, it takes minimum 2 months of time. So practical side, 2 months time. Theoretical side, 14 days time to admit or reject the application. Let us take the case of admission of application. On the date of admission of application, 3 things are done by adjudicating authority. Number 1, he is going to declare moratorium. Number 2, he is going to cause a public announcement. The public announcement is done by the IRP, public announcement. Number 3, IRP is appointed. So the IRP jobs from the date of the admission of the order. And moment it is going to be there, within 3 days, public announcement has to be released. And within 14 days, there is going to be a submission of claims. All these things you would have certainly done it in your previous class. It's only a recap to go into liquidation. But this particular area, you have to have your own chart to write the examination very clearly and also understand the nuances of the IBC. Okay, so within 14 days, you can expect submission of claims. Based on the submission of claims, within 7 days, you are going to verify the claims. verify the claims, verification, and on verification within 2 days, you are going to constitute committee of creditors. Once you are going to constitute the committee of creditors, within 7 days, first COC is happening. Okay, on the first COC, what you are going to do is, you are just going to, decide on first COC 2 things. Number 1, whether IRP is going to be appointed as the RP, or this is the first case. If the new RP is going to come, his job starts from that date. And third thing is like, what are the ratifications you are going to do in respect of the expenses incurred by IRP. These are the important areas you will be remembering. Whatever it may be, there is a 10 days time, which is a 40th day. Whether IRP is going to be continue or new RP is going to be appointed, both are not going to have a big problem unless and until 40th day your duty starts. Within 7 days, you are supposed to appoint the registered valuer, and 40th day within 2 weeks. Technically, 54th day, IM should be ready. These things are mandatory things. Once the IM is ready and all these things are going to happen, the next thing what you are going to do is, are you able to see the next slide? Hello?
No, madam.
You are not able to see. Okay, because I do not know. One slide after one slide, it has to come. It's not coming continuously. Okay, I'm going to take it. Few more slides. Don't worry. Okay, so let me try with this whiteboard. If it is working, then it's good. Okay, so on the ICD date, insolvency commencement date, within 75 days, you are supposed to form. One is like you are going to release an EOI. Second thing is like you are also going to form an opinion. Both things you are going to do it on 75th day. On EOI, once you are going to give 15 days, at least you are supposed to give for expression of interest. And provisional list is going to be within 10 days. And there is going to be objections within 5 days. On the very same day, you are going to issue a information memorandum, RFRP, and evaluation matrix to the prospective resolution applicant. And final list you are going to prepare within 10 days. Technically, if you are going to look into it, 75 plus 15, 90, 90 plus 10, 100, 105, 115. Same way, opinion you are going to form, and within 40 days, you are supposed to file it with IBBI. And on filing, within another 20 days, you are supposed to file it with the adjudicating authority. All these things, you would have read it in the first class. I'm just going to repeat so that you will recollect. So this is the other thing. Okay, so adjudicating authority, you are going to do that. Once this is over, the resolution plan and all these things are going to be united on 135th day, which is going to be resolution plan to be presented to COC, and 30 days time for deliberations. This is going to be 165th day. Once this is going to be approved with the 66% of majority, you are going to complete the entire task and file the application with AA, because the adjudicating authority, because of the COC has permitted with the 66%, you are going to file it with the adjudicating authority on 15 days before the entire process is going to be over. This is what you have studied in your entire CIRP process. Please remember, even though I'm talking about the timelines, 2 things are here important. Point number 1, for the new people who are first time listening to this, You have to be thorough on the timeline and also task involved here. People who are an insolvency professional, please remember all the timelines you are 100% supposed to adhere. However, if there is any kind of a problem, there are two case laws in this respect. Case law number 1, please read SR Steels. In that case law, they have very clearly said timelines are directory, not mandatory. If something you are unable to do it, you have to explain why you are not able to do that. Accordingly, you can quote SR Steel's case, wherein they have said timelines are not mandatory, it is only direct. That is one area you are supposed to look into it. The second area you are supposed to look into it, all timelines, it has to be adhered 100%. And persons who are attending this class, please try to understand, unless and until you understand the flow, how the flow is going to work, you will not be able to do it in the exam hall for two reasons. Reason number 1, some of the questions are complicated, answers are straight from the book. Number 2, the questions, whatever they are going to understand, is only contains the flow. They will only test your knowledge. Same way, if you are a practicing insolvency professional, some of the questions the COC is going to put to you, because not every COC member is fully aware of all the IBC provisions like us. They will ask a lot of questions. First thing, they will treat us only as the recovery agents. You have to tell them very clearly, we are not the recovery agents. We are the professionals. So we have to educate, and also we should definitely tell them and try to adhere various possibilities, various timelines which have been very clearly mentioned in the Act. Number 2, if any practicing professional, you are supposed to file CIRP 1, CIRP 2, CIRP 3, all these areas, or before preparing it, please read it. This will give you a very clear idea when you are supposed to do, what you are supposed to upload. These are the areas in line with the entire timelines. All the CIRP 7 forms are in line with the entire timeline. So you have to put yourself a very clear diagram of timeline, so that two purposes. One is you can adhere as and when is immediate. Number 2, you will be able to do it in a very clear and sensible way. These are the things about CIRP. Now let us get into liquidation. This is the positive side of the entire program. Now let's go into the negative side. Okay. The first thing in liquidation, when the liquidation is going to happen, there are 4 categories under which the liquidation is going to happen. Number 1, maximum days over. What is the maximum days? If you recall, section 12 says 180 days, extension 90 days, total exclusion with extension 330 days over, no resolution plan is received. Then automatically it goes into liquidation. The COC members decided, oh no, not COC, let's take the AA rejected the resolution plan. If the AA reject the resolution plan, again it goes into liquidation, because the AA can reject if there is no adherence to the 30 section, wherein it very clearly says if there is a resolution plan, it has to comply the various provisions very clearly specified in section 30. If it is not being complied properly, AA has a right to reject the plan. The COC members decided with the 66% of majority, and they said, let us get into liquidation. It could be on the first meeting, it could be on any of the meeting during the CIRP process. Number 4, what happens is the CD, the new CD who has taken over, with the approval of the adjudicating authority, contravenes any of the provision, and any person because of that contravention is affected prejudicially. Just a minute, there is something wrong with So the CD, who is the new CD who is contravening the provisions, and accordingly, there is any person who is prejudicially affected, he can also file an application before AA, and AA, after verifying this application, he may direct for liquidation. In liquidation, section 33 very clearly talks about 4 situations. Situation number 1, maximum days specified under section 12 has been complied and no resolution plan has been received. Number 2, the adjudicating authority rejected the resolution plan. Number 3, the COC members with 66% of majority decided to go for liquidation. Number 4, the CD, that is the new CD who has taken over, contravenes any of the provisions, and accordingly, any person is prejudicially affected because of this, again, this goes into liquidation. All these things are in section 33. Over and above, there are 2 areas you are supposed to remember. Once that maximum period is over, the moratorium lifts. Automatically, the company is coming into issue of free of moratorium. You know, the moratorium, during the moratorium period, no suits can be, or the existing suits will be stalled. Same way, in liquidation, section 33, subsection 5 very clearly says creditors cannot sue the CD. So there is a restriction for the creditors. They cannot. This is another kind of moratorium. See, this area for practicing professional is very much important. If somebody is going to sue or do anything, you can very well go ahead and tell them that as per section 33 subsection 5, they cannot sue the CD. Another issue is that on the date of liquidation order is being passed, on the date of liquidation order being passed, that is the last date of all the employees, workmen, officers of the corporate debtor, except when the liquidator wanted to continue for some time. Otherwise, that is the last date of the company function. Okay, the practical side is the moment liquidation order is passed, if it is beneficial for the CD to continue, they will continue. Otherwise, that is the last day. You have to close the company and come out successfully. That is very much important under section 33, subsection 7. See, in liquidation as well as CIRP, you cannot read isolatedly code separately, regulation separately. You have to read in a mixed way so that you will understand the process very clearly. Wherever the regulations are going to come in, I'm just going to combine regulations along with your code. So section 33 is the first section of the liquidation. It very clearly says under 4 conditions liquidation can happen. Condition number 1, please remember all these things are from practical as well as examination point of view. The first thing you should remember is maximum days have passed, but no resolution plan is received. Number 2, the resolution plan has come. However, the AA decided to reject the plan. Number 3, the COC members decided to go for the 66% of majority with the resolution stating that let us go for liquidation. Number 4, the corporate debtor contravenes or which in way or other affects the prejudicially any other person, again it goes into liquidation. Under these 4 conditions, the liquidation automatically begins. Okay, yesterday you would have read in bankruptcy process is not an automatic process because within 3 months of the order passed, either creditor or debtor can file an application before the adjudicating authority within the period of 3 months. So if you compare CIRP or corporate and LLP with the persons and individuals and partnership firm, here liquidation, their bankruptcy process, here liquidation is automatic. In bankruptcy, within 3 months you are supposed to file it. These are the areas, please remember, but anytime the liquidation, part 3, if it is going to be implemented, you should always remember all these things. Because this personal guarantors, which has come. Even in personal guarantors, if you look into it, you have to go by insolvency resolution process, and automatically it goes into bankruptcy process. So unless and until you are thorough with the entire process, you will not be able to consolidate and do help yourself in a clear way. So this is very much important in respect of liquidation process. Number 2, section 34 very clearly talks about appointment of liquidator. Whenever appointment is going to be there, the next section, if you are going to see that, is functions and duties of liquidator, or whatever it may be. If you look into it, this will be always come one by one. So if you get a sequence on all these things, this will be easy for you to remember and also refer immediately. This appointment, if you look into it, the generally RP will be appointed as the liquidator. However, there are few cases the RP will not be appointed as the liquidator. Exceptions. What are the exceptions? The resolution plan is rejected. If the resolution plan is rejected, AA will ask the board to represent somebody else other than the RP. Number 2, that particular RP is undergoing some disciplinary process. Then the same person cannot be appointed. Number 3, the RP has not given his written consent. See, in all the 3 circumstances, the existing RP will be removed and new liquidator will be appointed. Again, there are 3 areas you should remember. The resolution plan submitted is rejected by the AA, then the new liquidator is appointed. In the resolution, the board, there is some disciplinary proceedings against the RP, so the board recommends for the new RP, new liquidator. Third one is there is a written consent should be given by the RP on the last day of the presentation, wherein the liquidation is the agenda. If he is not going to give the written consent, again new liquidator is going to be appointed. So basically this area 99%, some of the practical side, some of the banks, if there is no resolution plan received, they themselves are changing the RP to somebody else as the liquidator. This is the practical side. Some of the banks or some of the financial creditors would like the resolution professional to continue as the liquidator, but some of the major banks, I have seen it, if the resolution professional is unable to bring a resolution plan, they have a policy to change the resolution professional for somebody else. So this is one practical side you have to remember. Theoretical side, yes, these are the areas the liquidator is going to be changed. When I said functions and duties, which is the powers of RP, liquidator, if you look into it, there are a lot of powers given by the board adjudicating authority under the belt of the liquidator. If you recall, there is a case in respect of Swiss ribbons. This will be taken for you on your case loss. In this case, they said resolution professional is only doing an administrative job, whereas liquidator is doing adjudicating job. What is the difference? Administrative job is collating the claims. Adjudication job of the liquidator is collating and also rejecting the claims if it is not as per the regulation, or there are certain areas where you feel that the claim raised by that particular claimant, you feel certain areas you will unable to accept. That area, the liquidator has got a right to reject the application. This is one area. Please remember, this goes with the Swiss ribbons case. And practical side, theory examination, there is no question from this area. If you remember, is okay. Whereas in practical side, the moment you are going to become the liquidator, all the powers and duties every liquidator should read, understand, interpret. Accordingly, they have to act, because certain duties are distinct and decision making are coming only at the liquidation stage. not at the stage of resolution process. Okay. Next section is section 37, power to access information. The entire set of any information, because the moment, if you recall, yesterday you would have read in bankruptcy process, the bankruptcy trustee is similar to liquidator. The first job of them is investigate. The second job is they have to realize by selling assets. The third job of this is distribute. So for investigating purpose, the liquidator should have the power to access all the information, and any person under whose privilege certain information has been withheld, you can very well ask them to share the information, and that particular power is going to come to you only by that particular level. So this is very, very important, both in case of liquidator as well as bankruptcy trustee. Okay, so this one area. Now let's get into a important area, which is from claiming. So you are just going to, the moment liquidation order is going to be passed, the liquidator has to issue a public announcement within 5 days. The moment liquidation order is passed, the liquidator has to issue a public announcement within 5 days, calling for the submission of claims within 30 days. See, if you recall in CIRP, the claim is for the period of 14 days. The maximum time allowed is 90 days. But there are case laws wherein if any person who is going to give a claim, that can be accepted before the resolution plan is approved. Whereas in this case, this liquidation area, this is public announcement. You are supposed to do it within 5 days. If you recall CIRP, you are supposed to do within 3 days, and calling for the claimant to submit the claims within the period of 30 days. Now, after getting submission of the claims, the verification period is again 30 days. Okay, after verification, within 7 days, the liquidator has got a right to accept or reject the entire claim or partial claim within 7 days from the date of verification. And if any claimant whose claim is rejected partially or fully, they can approach the adjudicating authority within 14 days from the date of claim. From the date of claim. This is section 42. Very, very, this is one area, please remember, a lot of questions are asked and some kind of a case laws are asked, especially in this regard. Let me also repeat, here in liquidation, there is no power for any of the liquidator to accept the claims after the period of 30 days. If any claimant who has not given the claim form within 30 days, then what is the procedure? Practical side, there are two ways of practical side. First practical side, that claimant, if he is going to send you the claim after the 30th day, you are supposed to reject, stating very clearly that you have not filed the application within the appropriate time. The claimant, because you are now not accepting, you are straight away rejecting. If anything is a rejection, they have to file an application under section 42, or they can file an application under rule 11 or 60 subsection 5C. All these things we will look into it. These are the ways the rejected claim can be presented before AA, and according to the decision of the AA's permission or AA's direction, the claims will be accepted. So, two important areas here. Number one, if the claim should reach all the liquidator within 30 days from the date of the publication of the public announcement. How do you do a public announcement? Again, you are supposed to give a public announcement where the registered office of the CD is there, one in vernacular paper, one in English paper. If there is a factory which is a little bit away from your corporate office, in that area also you can give the newspaper advertisement. Now, the second question here is, I have submitted the claim. Now I want to vary or modify the claim. Am I allowed to do that? The answer is 14 days time is there, whereas you can modify or vary the claim. So let me repeat, please note it down. All these things are in your book in various sections. If you are going to note it correctly, you will be able to, once you are going to read it, you will be able to correlate and collect everything easily. Now, the liquidation order is passed under section 33. The moment the liquidation order is passed, the liquidator has to give the public announcement within 5 days. And calling for the submission of claims from all the claimants within 30 days. And once the claims are received, within next 30 days, it's a verification of claims. Once it is verified, you have to send your acceptance or rejection of each claim within 7 days. Once you reject the claim, the particular aggrieved party can file an application against your decision before the AA under section 42 within 14 days from the date of receipt of the rejection. This is very, very important. Okay, now let's move to some niche areas which are important from the practical side as well as examination side. This is called PUF transactions. You would have been heard these transactions quite a number of times. These PUF transactions are, as a resolution professional, it is duty of you to do it under section 25 subsection 2 subclause J. It is part of the duty of the resolution professional. I told you while I've explained you about CIRP process, 75th day, the resolution professional has to form an opinion for the avoidance transaction. Now, what are the avoidance transactions? There are 4 kinds of transactions are called avoidance transaction. What are they? How you can remember both practical side and also now the case laws, case studies contains all these things. Please listen carefully. This is going to be helpful both on the practical side as well as on the theory side. First transaction is called preferential transaction. The preferential transaction is defined under section 43. What is the preferential transaction? The preferential transaction should be of 2 types. Okay, the preferential transaction, basically you are supposed to see that debt should be an antecedent debt. And the second thing, that antecedent debt should have been paid by the corporate debtor if it is a related party within 2 years, if it is an unrelated party within 1 year. And because of the payment, this particular debt creditor is in a preferential position on liquidation. If that be the case, these transactions can be filed under section 43 before the adjudicating authority and ask for the direction under section 44. What happens here? If there is a preferential transaction which has been transacted with the related party 2 years from the insolvency commencement date, if it is an unrelated party 1 year from the insolvency commencement date, If this transaction you are able to figure it out from the books of accounts, then it is your duty that you are supposed to certainly report to the adjudicating authority. Now, I will tell you, if you want to read about this particular area, please refer Jayaprakash Associates Limited and JP Infrastructure Limited. This case is going to be part of your case law, wherein this preferential transaction has been explained fantastically, and you will be able to understand what are the precautions you are supposed to take care once the preferential transactions are going to be found in the entire area. There are exceptions to this preferential transactions. What are the exceptions? This particular antecedent debt, now you are going to clear, this is the ordinary course of business. If it is an ordinary course of business, that cannot be called as a preferential transaction. Number two, it does not give a new value to that particular creditor. See, what does it mean by new value? The new value is that if there is a contract between a creditor and the particular money has been received by the creditor to do that transaction, and it is being done in the ordinary course of business, this cannot be termed under preferential transactions. Let me tell you this preferential transaction, section 43, once again talks about creditors in a beneficial position. Number two, this is done for the antecedent debt. Number three, because of this, it is happening between a related party within 2 years period and unrelated party within 1 year period from the insolvency commencement date. And this is not happened in the ordinary course of business. And please refer Jill and John case. This will give you a very clear idea, because case studies definitely ask you a question in respect of this particular transaction has been happened, whether it is a preferential transaction. Same way, people who have been practicing as an insolvency professional, it is part of your duty to see that whether any preferential transaction has been happened within the period of 2 years.
Madam, case name, please, ma'am. Sorry for interrupting.
Yes, sir.
Case name, madam. Complete case name. People are asking about it.
Definitely, you can ask me a question, sir.
No, ma'am. Case name, JIL case.
Sir, Jill and John is JP Infrastructure Limited, Jayaprakash Associates Limited. This is Supreme Court case. I think this will be covered on day after tomorrow. If you have an interest, go to IBBI site, ibbi.gov.in, wherein orders, you go to Supreme Court, wherein you write Jayaprakash or JP Infratech, the case law will automatically come in, or otherwise Google it, it will come. This is one of the important case law where you will understand how the court interprets the preferential transaction. Okay. And I would also like to tell you some of the insolvency professionals. I know that insolvency professionals are also attending this course. If you make an application, please be very specific, because the purpose of 43, 45, 49, 50, 66 are different. So if you are going to club everything, generally the court is not acceptable to these kind of applications. You are supposed to file each and every application separately. Okay, this is about preferential transaction. Now coming back to that, there is a transaction which is a preferential transaction which you are able to figure it out. Then you have to file an application under section 43 and ask for direction under section 44. Section 44 talks about if there is a preferential transaction, the court will order for cancellation of that particular preference, and that particular property or whatever it may be, the preference given will be vested with the corporate debtor. Currently, corporate debtor is none other than the liquidator. So, practical side, if you want to file an application, what are the relief sought is there in section 44. Okay, now let's go into the next area of the avoidance transaction. Very interesting area, undervalued transaction. This transaction, if you are going to see that, again, I'm going to divide into 4 categories. One transaction is a section 45. Another transaction, we are going to talk about it, section 47, then order, section 48, and again, section 49. All these things are related with only undervalued transactions. What is an undervalued transaction? Friends, let me tell you, the company, the director purchased the assets, movable assets. Say, for example, director purchased the car. However, the company pays every month the installment on behalf of the director. Then this is coming under section 45. I'm giving you an example to understand what is section 45. Section 45 is an undervalued transaction. Under 2 categories, it's a gift. If it is a gift given by the corporate debtor to somebody, again, that can be filed under section 45. Number 2, the market value or the transfer of the asset by the corporate debtor for a consideration significantly less than the which is very much important, significantly less than the value of the consideration provided by the corporate debtor. What does it mean? I'll tell you practically what has happened in one of my cases. I'll complete and I'll come back about these areas. This is a very interesting area. That is one thing. Okay, now section 45 talks about 2 situations, how the undervalued transaction is happening. The first one is the corporate debtor gives the gift to any other person. Number 2, the consideration is significantly less than the consideration provided by the corporate debtor. Okay, now section 46 talks about the relevant period. Again, related party transaction, it says 2 years, and unrelated party transaction, it says 1 year from insolvency commencement date. I mean, backwards from the insolvency commencement date, you can go back 2 years. Look back period is 2 years from the insolvency commencement date if it is a related party. If it is an unrelated party, it is 1 year from the insolvency. 1 year look back from the insolvency commencement date. Section 47. Basically, as an RP, as a RP or a liquidator, as the case may be, you have not seen or not filed the undervalued transaction. You are failed to file an undervalued transaction. Then any person can file an undervalued transaction before the AAA, and AAA, by looking into the application, if that application is acceptable, they will recommend for removal of your name to the board to take an appropriate action. Number 2, if it is going to be rejected, then you will continue. This is one important area, little bit dangerous. You should be very careful. Section 47. If the RP or the liquidator is unable to find out the undervalued transaction, any other person, could be a member, could be the COC, could be any creditor who is going to file the application other than the RP. If the AA is going to consider that application, this is dereliction of duty. The AA will certainly recommend the name to the board for the disciplinary action. So one dangerous area, please remember very, very clearly. Okay, now I filed an application either under section 45 or somebody has filed an application under 47. How the order is going to come is defined under section 48. The order could be the entire property which has been undervalued will be transferred or come to the original position, or that entire transaction may become void, or the entire transaction or any money supposed to be received, such consideration should come to the liquidator. Like if you are going to file an application, the relief section is under section 48. What is section 49? This is another interesting area. If the consideration is less than, significantly less than the consideration provided by the CD, then in that case, this is defrauding creditors, which means no look back period. What I mean by no look back period is, if there is that kind of a transaction, you have every right to go back as many years as you want, but you know pretty well, Companies Act provides you only the maximum period of 8 years of books of accounts, not beyond 8 years. Okay, so fundamentally, maximum period you can go back is 8 years. There is no restriction of 2 years look back or 1 year look back, as the case may be. If there is a provision of defrauding creditors in respect of the consideration significantly less than, under this category, you can file an application under section 49. Okay. Since I told you, I have two circumstances which we have filed an application on the practical side. In one case, we were able to find it out from the information memorandum, wherein yesterday you would have read information memorandum, wherein if there is a significant related party transactions, it has to be mentioned in the information memorandum, and it is also part of the duty of the RP to file an avoidance transaction, if any. If they have not done it, if any person who is going to file an avoidance transaction application based on that particular area, there is a likely chances A may take a view, depends upon the application. So we have taken up one case wherein we have found that there is some kind of a related party transaction which was not present in the particular IM. Then we did a little bit investigation in this respect, because I told you it is not a single person, it's a team. Because once you are going to have a team, once you are going to discuss each person, because we all are professionals. So once we are going to discuss as a team, everybody can give you an input where you will get a different kind of ideas so that you can work in a better and excellent way. So on the discussion, we were able to find it out. There is definitely an undervalued transaction which was not reported by the RP. We have taken that particular stand and we have filed an application. And when we filed an application, we were having a material only 20%. When we go for an inspection of all the documents by paying appropriate fees with the NCLT and ask for the copy of the documents, we were very successful, able to figure it out. This undervalued transaction was not mentioned by the RP properly. So please be careful. You should be very clear. Under any circumstances, this is one dangerous provision. You are not supposed to take it lightly. Never ever take things lightly. You should be very careful in this area. The second area of my experience is I have filed an application under section 49 because I was able to see in one of the transactions wherein there was a transaction between a related party, and if you look into it, the transaction between a related party is 2 years period. So the advocate whom I have employed, or rather fixed, and I had a very big discussion. He said, like, you cannot do it because that particular transaction happened 3 years before. I told him, if there is a defrauding of creditors, and if you read section 49, it very clearly says, if there is a significantly less than the market price, you can file as many years as you want. So we have filed an application. Currently, it is in sub judice. Why I am saying all these things to you is like, this is one area because the IBBI wants 10 years of experience. We are all professionals. Because of our experience, certain areas, by looking into any kind of a software, any kind of a financial statements, we will be able to figure out easily there is some kind of a lacuna in certain areas. If you do little bit research, you will be able to find it out all these things by yourself. Why I'm saying this particular area is one challenging is our experience helps us to understand better. The second thing is like the immense pleasure of finding out something gives you a complete satisfaction, so that like no, you feel little bit pride and power. You will 100% feel happiness, but you are not going to disturb others. You are doing your job. Never ever think complacent kind of a this thing. It is your job. But if you could able to find it out, you will be surprised how people are doing it just like that. And this area, I'll tell you another gold mine, wherein you can look into the transactions, but that transaction should be 100%, remember, should be 45 subsection 2 clause, whereas the entire this thing is significantly less than the overall consideration paid by the corporate debtor. These are the two areas, practical as well as case studies is very important in this area. The third one, which I would like to tell you, is about extortionate. Actually, this extortionate transaction, how do you define extortionate? Is nothing but extraordinary payment, extraordinary interest payment. See, technically, if any payment for 24%, you can file an application. According to the AS decision, this may come down to 18%. This may also come down. It is the discretion of the court to do that. If there is an extortionate transaction, which is an extraordinary interest payment or unconscionable payment, you can file an application and order will come under section 51. This is section 50. This is again another avoidance transaction, which are very, very important. These orders will come accordingly. Okay. So extortionate transaction. See, in fact, when we started practice, we received a case in respect of one particular section 7 application filed by the financial creditor. This financial creditor has given money to the corporate debtor at the rate of 18%. This is what stated in the court order. However, when we looked into the books of accounts of the CD, this money, whatever the financial creditor has given, is charged at the rate of 23%. And on calculating this, we were able to see that he wanted 40 lakhs. And these transactions were between these two people over the period of 8 years. And when we put 18% interest, in fact, the CD has to, this financial creditor has to pay the CD something around 80 lakhs. But only one area of problem with the most of the corporate debtors are non-cooperation, not submitting the data as and when required, and not giving an adequate information. See, practical side, if you recall, in CIRP process, the speaker would have told you section 19 is a non-cooperation application. You are supposed to file it with the CD. But this is a section, practically every IRP or RP is filing an application, because whenever we want records, the corporate debtor is not providing in time unless and until it is a going concern. If it is not a going concern, the challenge for the IRP, RP is getting the data, preparing the IM within a time. Examination point of view or a refreshing point of view, 19 is a casual one. But practice point of view, 90% of the IRPs have filed 19 to application to collect the data. So what is important here is, if you are unable to collect the data, you will not be able to do avoidance transaction. Avoidance transaction, you are supposed to form an opinion on the 75th day. On 115th day, you are supposed to file it with the board. On 135th day, you are supposed to file it with the AA. The first preference, you are supposed to file it with the board. Board is nothing but IBBA. You are supposed to file it. This is one important area. Please remember clearly, it is the part of the duty of the RP. They are supposed to do the avoidance transaction. Now, the practical question, I am unable to do it during RP period. Am I allowed to do it in liquidation? Yes. But Once you are, I will tell you Chennai practice. In Chennai practice, we are supposed to give whether there is a resolution plan or not. We are supposed to give Form H, which is a compliance certificate, wherein one particular column very clearly says that have you done the avoidance transaction, forensic audit kind of a this thing, wherein you are supposed to say that if you have filed, you have to file, or otherwise you are supposed to say that during liquidation, I would like to file this avoidance transaction. Practical side, if there is a forensic audit report, you are not unable to receive it because there are two things COC is doing. Number one is avoidance transaction. This is RP's responsibility. The number two is a forensic auditor being appointed. He will give you the report to RP, which in return will go to COC. But this is only a supporting document. You cannot take forensic auditor opinion as your opinion. Based on the supporting document of the forensic auditor, you are supposed to form an opinion as an independent professional. Accordingly, you are supposed to file it. So maybe within 30 days, if you are going to continue as the RP, please plan forensic audit accordingly and get the report at least before 100 days, so that it will be easy for you to comply everything within time. Okay, so this is the practical side which I thought I should also share it with you. And after this extortionate transaction, the next section is section 52, banker's prospective. This is a very important section. Why I say it is a banker's section, here is what bank is going to relinquish, or they are not going to relinquish their rights. See, if you recall, the bankers during CIRP, they are going to be with you as a financial creditor. If there is any resolution plan is going to come, they may get something. This financial creditor could be secured creditors or unsecured creditors. But in CIRP, everybody is coming under financial creditors. Whereas in liquidation, secured creditors have an option to relinquish their security interest or not to relinquish. I will just explain to you little bit later what is this position of the banker, especially in this. The next one is a very important section called section 53, which is otherwise called a waterfall model. Again, this is very, very important. See, I told you, as a liquidator, the first step is investigate. The second step is realize the assets. The third step is distribution of the assets. The distribution happens on waterfall model. How it is going to be done? The moment, say for example, you are going to collect the money. Now you are supposed to distribute as per the priority given under section 53. And this particular area, if you look into any textbook, this particular name will not be there. This was there in the report, ILRC report, wherein we have started saying it. So it is okay if you understand. The whole interesting part of this insolvency is insolvency resolution process cost and liquidation cost will be taken out in the first, which means our cost we will take it out on the realization. So the first happy news is like we are going to take our cost. This cost includes our fees, persons appointed by us, like valuers, like auditors, like other professionals wherein you have taken their advices. Everything is going to come under this liquidation cost. The second is going to be workmen for 24 months. Workmen for 24 months. And this workman 24 months is going to be from the preceding date of liquidation commencement date. Say if liquidation is commenced on 10th month 20, this goes 24 months backward. Only 24 months for the workman plus secured creditors. Secured creditors who relinquished their assets. Here, if there are secured creditors who said, I will give this entire asset to the common pool. If I give the assets to the common pool, as and when a liquidator is going to realize that secured creditor is going to take that particular money with the order of priority as 2. Third, employee, 12 months preceding LCD date, liquidation commencement date. The fourth one is unsecured financial creditor. Unsecured financial creditor. The fifth one is government dues, that too for the period of 24 months, plus unsecured portion of secured creditors. I will explain to you, don't worry. The fifth one is government dues, that is maximum period is 24 months, which is 2 years, plus unsecured portion of secured creditors. Please recall, a person who is going to relinquish the security interest will come in the position of 2. A person who said, I will not relinquish, I would like to sell the asset under SARFAESI, which is under my control. I sold the asset. My claim was 20 crores. I sold the asset only for 15 crores. There is a balance amount of 5 crores which I have unrealized. That person will come here. Now you are able to understand, unsecured portion of the secured creditors will come jointly with the fifth order of priority. The sixth order of priority is other creditors, other dues. Technically, operational creditors will come here. And if you look into it, if the wages have not, workers have not been paid for 36 months, they can come here. Employees have not been paid more than 12 months, again they will come here. And all these government dues will also come here. If it is over the 2 years time, all these people will come under the category of other creditors, other dues. Next one is preferential shareholders. The next chance, the final chance is equity shareholders. Now, let me explain to you once again, because I know unless and until I explain to you, you will not be able to understand completely. This is one important area, case studies, case law, every area this will come. The first person who is going to get the distribution is basically an IRP cost and liquidation cost. Whatever has not been paid to you, you can collect it on the realization of the assets. Number 2, wages of the workers. Again, there are 2 points you should remember. One is workman is defined under section 3 subsection 26, which is defined under Industrial Dispute Act. Workman dues is defined under section 326 of the Companies Act. Please read both the things so that you will be able to remember what are the differences, because certain areas of Industrial Dispute Act, workman is defined in a different prospect. Because generally managerial capacity we always think, however the supervisory capacity is still coming under workman. So in every area, please define who is a workman, who is an employee. Both, every person individually take a call whether he is a workman or an employee. Okay, so the third person who is going to take the distribution is an employee. His due is only for 12 months period. The fourth person who is going to take the money is unsecured financial creditors. Generally, NBFCs and banks which have given a clean loan will come under this category. The fifth category is government dues, again restricted with 2 years, plus unsecured portion of the secured creditors. The sixth portion is other dues, that is operational creditors and other creditors will come here. The seventh portion is preferential shareholders. The eighth portion is equity shareholder. Now, I would like to give you a comparison chart between section 53 and section 178. Okay, section 178, if you recall, this is related with individuals and partnership firm. This is related with the CAR, corporate and LLP. Okay, here first preference is insolvency process cost and liquidation cost. Here also same thing, resolution process cost with the bankruptcy trustee cost. Number 2, here workman 24 months plus secured creditors. Here also, if you look into it, workman 24 months plus secured creditors plus funeral cost and testamentary cost of the deceased person. They will also get along with them. The third thing, if you recall here, is an employees 12 months LCD. Here, again, employees 12 months. Here, fourth category here is unsecured financial creditors. Here, fourth category is government dues, government dues, and here fifth category is government 24 months. Here also 24 months plus unsecured portion of the secured creditors. Sixth position is other creditors. Here fifth position is other creditors. Here seventh position is preferential shareholders. Eighth position is equity shareholders. Friends, to be honest with you, all these things, if you look into current status of the liquidator of any company, 99% this will never cross this area. There is no question of rest of the people receiving anything. I've been handling some of the cases wherein there is nothing realizable. In fact, secured creditors in most of the cases, the haircuts are huge. Basically, in some of the cases I've seen, 50 crores is the claim amount. They will receive only on the assets is only 20 crores. Where is the question of rest of the people getting here? This unsecured financial creditor, 99%, even though I think 90% of you know, this unsecured financial creditor, so far they have been filing a case under section 138 of the Negotiable Instrument Act. Today, the Supreme Court has very clearly said that is also to be stalled under moratorium of section 14. So under these circumstances, most of the cases currently we are facing the problem is that it is not crossing more than 2 layers. It is not at all coming to rest of the people, especially in respect of the operational creditors, practical side, who has initiated the operation of putting that company, unless and otherwise that particular company is a going concern. Getting money by the operational creditor is the rarest chance. If the company is a dead company, in fact, he will have the more problem, because realization is very difficult unless and until that company's balance sheet is asset over liabilities. Otherwise, you will never get, operational creditors will never get anything, even though they initiate the entire this thing. Okay, this one area, please remember, this is a very, very important provisions. Why I have given you a comparison study is like, the moment if you do the cases and also know, if you understand it clearly for the case laws and discussing with your friends, if you do these kind of comparisons, it is easy for you so that you can come to a conclusion on various stages immediately. Okay, so let me once again repeat. Insolvency process cost, you should remember. Liquidation cost, this cost is belonging to the liquidator, insolvency professional. The first realization is only to us, followed by workman with the secured creditors, and followed by employees 12 months, followed by unsecured financial creditors, followed by government 24 months, plus unsecured portion of the secured creditor will come under subsection 5. Generally, this will be A, B, C, D, E. They will refer 53 subsection 2 of clause E, if in your book, and the sixth one, F, is going to be other creditors, then preferential shareholders and equity shareholders. Please remember, there is a purpose behind. I want you to write it down, because once you are going to write it down, once you start reading with your book, you will be able to recollect, and whenever see your own handwriting, you will be able to understand much better, rather than studying the PPT. Even if you are going to study the PPT, nothing wrong in it, but you have to prepare notes by yourself by having a diagrammatic view, so that easy for us to understand, remember the timelines and comparative timelines. If you are going to put in, it will be easy, so that your presentation, your way of understanding things will be much better. Okay. After this, there is one provision, section 54, dissolution. So the moment you have distributed everything, it is the duty of the liquidator to file an application, and this particular applications once filed, and AA will pass an order, because everything has been distributed, nothing else is there. Then the moment AA is going to pass the order, within 7 days from the passing of the order, this should be filed with the ROC. This has to be filed with the ROC, which is nothing but an MCA. You are supposed to file it within 7 days. This is about section 33 to 54, part 3 of the corporate and LLP, not part 3, chapter 3 of corporate and limited liability partner of the part 2 chapter. Okay, so with this, liquidation per se on the code is over. Now let us get into regulation, and once you understand the regulation, we will combine everything. So end of today, you will be thorough with liquidation process along with the voluntary liquidation, because once you understand the liquidation, there is only a comparative chart with the voluntary liquidation. If you understand liquidation thoroughly, liquidation regulation thoroughly, the next thing is the easiest chapter that I will take care of you. Now let's get into liquidation regulations. Where does regulations come? Who is giving your regulation? Regulations are issued by IBBA. I told you, liquidator, once he is going to appoint, he has to file public announcement within 5 days for the collection of submission of claims within 30 days. Okay. Now, if you recall, in CIRP, the publication is under Form A. Here, Schedule 2, Form B is the public announcement. The claims, again, Schedule 2 covers the claims. If it is an operation creditor, he has to file in Form C. Financial creditor, he has to file in Form D. If it is an employee singular or workman singular, Form E. And employee and worker collectively authorized representative in Form F. Other creditors, Form G. And basically, again, we will come to the other areas little bit later. This is how you are supposed to file the form. You know, financial creditors should always file it through email. Rest of the people can file it in person, through email or courier, whatever the way they are supposed to do, they can do it. This is area, please remember, always verification, 30 days, accept or reject, 7 days, and also the person whose claim is rejected, within 14 days, the aggrieved party can file an application with AA. Over and above, it is also important on the liquidator has to give certain reports to the adjudicating authority. Let's come to the report part. Okay, what are the reports the liquidator is supposed to give? He is supposed to give preliminary report. He has to give an asset memorandum report. Preliminary report, asset memorandum report, progress report. He has to give a asset sale report. He has to give a consultation of stakeholders. Don't worry, this is called Stakeholders Consultation Committee report. Let me repeat. Stakeholders Consultation Committee report. I'll explain to you a little bit later about this. And he has to give the final report. All this report is the duty of the liquidator has to give. I am taking it in a purpose. I have covered all the regulations. One is practical side. Second one is everybody has to avoid what exactly these things. This preliminary report and asset memorandum report should be filed within 75 days from the liquidation commencement date. The preliminary report, asset memorandum report should be filed within 75 days from the date of the insolvency commencement date. The progress report and asset sale report have to be filed 15 days after end of every quarter. Progress report and asset sale report go hand in hand. It has to be filed 15 days after end of every quarter. Stakeholders report, as and when you are going to do that, this stakeholders report also you will do that. Final report is the report on the closure, you will be able to do that. Now, I would like to give you some more information which are very important. Liquidation commencement date. This is submission of claims. This is 30 days. And I told you very clearly, 75 days, preliminary report and asset memorandum report you are supposed to file. Apart from it, this submission of claims, from submission of claims within 45 days, you are supposed to file a list of stakeholders report. Again, all these things, timelines, you must know. That is why I'm writing and telling you. You are supposed to file 45 days from the date of last date of submission of claims, a list of stakeholders report. And please remember all these things, if you look into it, it falls on the 75th day. It falls on the 75th day. And what is, again, I told you, stakeholders consultation committee report. You know, submission of claim is 30 days. Verification of claim is 30 days. On the verification, completion of the verification date, the liquidation, from the date of liquidation commission, you are supposed to do a stakeholders consultation committee. You are supposed to have finalized who are the stakeholders consultation committee. You are supposed to form 6 from the liquidation commencement date within 60 days. All these things are there. I will take a little bit later who forms part of the stakeholder consultation committee and whether their decisions are binding on the liquidator or not. I will come there little bit date. Please note it down. From the liquidation commencement date, within 5 days, you are giving a public announcement. 30 days submission of claims, and you can vary or modify the entire claim within 14 days from the date of submission of claims. And verification is going to happen within 30 days. On the very same day, it is the duty of the liquidator to form a stakeholders consultation committee. And it is the duty of the liquidator to file with the adjudicating authority within 75th day preliminary report, asset memorandum report. Clear? All these areas are statutory timelines. You cannot miss anything. That is why I'm repeating it again and again. Please note it down. This is a statutory compliances. You are supposed to do it 100%. Okay. So once you do that, you will be knowing what are the jobs you are doing, how you are doing it. Okay. Now let's look into little bit nuances. What is a preliminary report? The preliminary report is generally, it should be filed within 70 days and it should contain capital structure of the company, and it should contain estimated assets and liabilities, and it should also, the liquidator should state any further inquiry is required to investigate the affairs of the company, and he should also very clearly say what is his proposed timeline for the completion. All these things form parts of the preliminary report. This should be filed within 75th day. The capital structure of the company is, you have to state, estimate of asset and liabilities of the liquidation commencement date is important. Any further inquiry about the corporate debtor is required, you are supposed to state, and proposed timeline you are supposed to state in the preliminary report. Now let's get into the second report, asset memorandum report. This is again an important report. Again, this should be filed along with the preliminary report within 75 days. And this particular report should contain value of the asset. What is the value of that particular asset? And the second thing, it should also contain what is the intended manner you want to sell the assets. Okay, manner of sale. I'll tell you, there are certain manner the sale should happen. First, you understand broadly, then let us look into it, read it, you will be able to understand. Manner of sale, what is that you are going to sell? You are going to sell the assets. So you can sell on a standalone basis. You can sell on a slump sale basis. You can sell the assets collectively. You can sell the assets in parcel. You are supposed to sell the company as a going concern, or you can supposed to sell the corporate debtors business. However, the first job of the liquidator, once this particular company goes into liquidation, the first job is he has to look into it whether you will be capable of selling the company as a going concern in the liquidation. In this regard, what the Act regulation very clearly says in this regard, you can very well under regulation 2B go for a compromise or arrangement under 230 of the Companies Act. Okay, now the difference between resolution plan and liquidation is the value is going to be much deteriorated, but this compromise and arrangement is more like you have to follow section 230 of the Companies Act. So only one condition for this particular level is the person who is going to propose the scheme should not be disqualified under section 29A. What is this 29A? You know who are the persons are not eligible to become the resolution applicant, undischarged, insolvent, willful defaulter, a person who account has become NPA and more than 1 year has been passed. He should not be disqualified director. He should not be prohibited under SEBI. He should not have any kind of a preferential or undervalued transactions with the company. All those things, once again, you are supposed to verify with the person who is going to present the scheme. Okay, this is very important. This has to be done within 90 days from the insolvent liquidation commencement date. Now the question, practical side, I'm unable to find out somebody in the 90 days. Yes, you can file an application before the NCLT requesting them to consider why there was a delay. Once you are going to file an application with a clear indication, you will be easily See, the idea of the adjudicating authority is basically a corporate life, corporate revival, rather than liquidation is nothing but corporate death. Nobody wanted a death of a person, everybody wanted a revival of the company. Accordingly, if your explanation and the scheme is 100% approved, as per section 230, you have to follow 230 immensely as per Companies Act. It is not under IBC, it is under Companies Act. If all the provisions are properly met, and same thing, some of the court members, some of the adjudicating authorities also wanted this should also be approved by stakeholders consultation committee, because stakeholders consultation committee, if you recall, which is formed on 60th day, this is going to happen on within 90 days. So they will also be part and parcel. So both of them, if they are going to approve for this, the adjudicating authority will approve the company to taken as a going concern. This is an important area. The another one is serious business. Serious business as a going concern. If some company certainly may have certain kind of a comfort, they may have the license. They don't want to take out the company. Instead, they will take a company's business, which is a license or the thing that is possible here. So this is called intended manner. Next one, what it says is that intended mode. Mode is nothing but public sale, private sale. What is a public sale? This is nothing but an e-auction. You are just know the reserve price, you know what is that value, you are calling people to participate in an open forum. That's called public sale. What is a private sale? The private sale happens on 4 circumstances. The circumstances, number 1 is if the goods are in perishable nature. If the goods are in perishable nature, and second, the goods will deteriorate over the period of time. The third one, the person is coming and giving you higher than the reserve price. In all the category, you can file an application before the adjudicating authority to give permission to do the private sale. The only area exceptions are everywhere, exceptions are there. Wherever the exceptions, you should remember. Most of the exceptions, if you are going to look into it, the purchaser should not be a relative of the liquidator. The purchaser should not be the relative of the person appointed by the liquidator. Third, the purchaser should not be the relative of the corporate debtor. Most of the areas, if you are going to look into it, only these 3 conditions will come. One more condition, if you recall, in certain areas, auditors will come. Any auditor whose services with the company is less than 5 years, they are not supposed to come as a registered valuer. They cannot also be the liquidator of that particular company. These are the restrictions. Wherever the exceptions are there, you should remember. Let me once again say, there is 2 kinds of the mode of sale. One is a private sale, another one is a public sale. Public sale is basically an e-auction sale wherein lot of portals are currently available. Any liquidator can approach the portal and inform that particular portal to do an e-auction. And most famous one is lot of e-auction portal is there. There is e-tiger kind of a thing. They are doing a real good job, and lot of people are coming forward to do the e-auction, especially in this respect. And private sale, which is again very much important, under this is being done. One is if the materials are in the perishable nature. Number 2, this is the materials are going to be deteriorated if you are going to keep quiet on it. Number 3, the price, whatever be the reserve price, the price offered by that particular party is higher than the reserve price. In all the 3 categories, the liquidator can file an application before the AA and ensure that to certainly transfer the particular asset to the purchaser. Only exceptions are three. The relative of the liquidator cannot be, even this is also allowed, but only thing is, again, you have to disclose. And with the permission of the AA, yes, you can sell it to these people also. But however, generally relative of the liquidator, relative of the persons appointed by the liquidator. Generally, liquidator is allowed to appoint professionals to complete his job. So these categories, they are not allowed to take advantage of the situation. The third one is relative of the corporate data. This is about the mode of sale under this particular asset memorandum report. The next one is what is the expected sum the asset is going to be realized. That also it is the duty of the liquidator to specify. And other always the miscellaneous class, other information, if the liquidator feel it is relevant to be given, he is allowed to give. What are the things I have told you? Value of the asset, second, value of each and every asset, intended manner of the asset, intended manner how you are going to sell the asset, that is standalone basis, slump sale basis, collectively you can sell the assets in parcel, you can sell the company as a going concern, you can sell the company as a company's business as a whole. And intended mode of sale, mode is only two types, private sale and public sale. I have explained to you. And what is your expected amount of realization of selling this asset and other things, all these things you are supposed to state in the asset memorandum report. You may be surprised why I am giving you a lengthy area, because this area on the 75th day, along with the preliminary report, it is part of the duty of the liquidator to present it with the adjudicating authority. This asset memorandum report cannot be shared with any person unless you get the permission from the adjudicating authority. This is important. Now, I said progress report. What is a progress report? I told you this progress report should be given 15 days after the end of the quarter. Again, this is one of the area you are supposed to give. What is the progress happened within that quarter? Technically, say for example, you have been appointed on 25/2/2021. The first progress report should be 25/2/2021 to 31/3/2021, and this report should be filed on or before 15/4/2021. The second report should be always 1/4/2021 to 36/2021, should be filed on or before 15/7/2021. So all the quarters you are supposed to file. On the fourth quarter or the financial ending quarter, say for example in this area, the financial ending quarter is this. Here you are supposed to give the receipts and payments account, audited receipts and payment accounts of the liquidator. You are supposed to give along with the preliminary report. So this is one area, please remember. I told you one more area is asset sale report. Asset sale report, which has to be filed along with the progress report, because this is filed along with that, the meaning 3 months period, whatever be the assets sold, you are supposed to give the description of the asset, value of the asset, and how you have sold, what mode you have conducted, what manner you have sold, every detail, what was the realization amount, everything you are supposed to give in asset sale report. This report goes along with that. Okay, so coming back to the other areas. Okay, now let us recall for your easy memory. Liquidation order, 5 days public announcement, 30 days submission of claims, 30 days verification of claims. The very same day, stakeholders consultation committee is formed, and 7 days accept or reject. If there is a rejection, there is a appeal to be filed within 14 days, and 75th day, it is immaterial. You have to file preliminary report, asset memorandum report, and list of stakeholders, because on submission of claims within 45 days, you are supposed to prepare the list of stakeholders report. If you recall, by this way, you will be covering so many areas, and also you will be able to understand what are the things you are supposed to do once you become a liquidator. And if you read it and do it by yourself 2 times, it is easy. The entire presentation will come to your fingertip for practice as well as giving clarity to various people. Okay. Now, having said these things, there are other areas which are very important to be covered. One area, the moment liquidator is appointed, within 7 days,
Excuse me,
you
ma'am.
have to appoint a valuers, registered valuers.
Sorry
And
for
these
interrupting,
were,
ma'am.
yes, sir.
Can we take a 5 minutes break? 5 minutes or 10 minutes?
I'll just definitely give you, sir, just 5 minutes. I'll complete, then I'll give you a break.
Okay, ma'am. Okay, please.
You feel very, very tired? No, if you feel like that, I would like to give you, because I just want to complete, then I would like to give you the break. Don't worry, I'll certainly give you the break. Even single-handedly, without seeing any person, I'm doing it on my own. That itself is a very difficult task, but let me complete, then I'll certainly give you the break. Just give me 5 minutes, okay? And the registered valuers are to be appointed within 7 days of the liquidation commencement date. See, if you recall in CIRP, there are 2 registered valuers will be appointed. If the value is more than 10%, third registered valuer will be appointed, and the average nearest between these two will become the value of liquidation value and fair value. Here, there are only 2 people. The average is taken into account. There is no third registered valuer here. This you are supposed to remember. Apart from it, there is section 52, which is talking about the banker's relinquishment. This has to be read with regulation 20, regulation 21A, and regulation 30, 30, sorry, one second, 37. All these things you are supposed to do. Regulation 20 says what is the security interest. Today, most of the areas, the security interest plays a vital role, because some of the people are having first charge, some of the people are having second charge, some of the people are having pari passu charge, some of the people are exclusive charge. These areas plays a very vital role how you are supposed to do it. Regulation 37 describes how the secured creditors who are not interested to relinquish, what are the procedures they have to follow. That has been defined in Regulation 37. Now, one more area which I feel very much important is, like, you have collected the money and you are supposed to distribute. You are supposed to distribute the money within 90 days from the date of collection. So 90 days, which means you should have finished asset memorandum report, you should have finished list of stakeholders. So both the things you should know to give it to them. And these are the fundamental areas you have to read in respect of the liquidation regulation. And I would like to give a break of 6 minutes. Let us assemble at 5:50, so that the balance of other areas I would like to take it out. So break for 6 minutes.
Okay, ma'am. Thank you.
Thank you. Back.
Please.
Because time is very short. Whatever I know, I just want to teach you, and also I want to learn from you. So that is why I'm little bit going fast. And anything you want to discuss with me, last 15 minutes we will take it. And maximum, whatever I know, I would like to share it with you. That is the reason I'm going in a little bit speed way. And please ensure that any doubts you have, write it down separately. Certainly, I will answer any person's doubt. Anybody wanted to leave by 7 o'clock, you are allowed to leave. Anybody wanted to know little bit more on after 7 also, it's okay. You can ask me any doubts in any area of IBC. I will certainly help you regarding any clarification, any help. So with this, let us go back to liquidation regulation. One area I have not covered is stakeholders consultation committee as per regulation 31A. I told you the stakeholders consultation committee should be formed from the within 60 days from the date of liquidation commencement date. Who forms part of the stakeholders consultation committee? There is something which please remember, secured creditors, there are two parts. One part says less than 50% of liquidation value. How do you know the liquidation value? We know the liquidation value because we have appointed the liquidator, registered valuers who are going to give a fair value and liquidation value. Based on that, we are just going to select people who are holding less than 50% of the liquidation value and at least 50% of the liquidation value. Here, the members who are less than liquidation value is 2 members. Here, the members are 4. Same way, unsecured financial creditor, less than 25% of the liquidation value, at least 25% of the liquidation value. Again, here members are going to be 1. Here members are going to be 2. Same way, workman, he forms 1 person. Employee, again representing 1 person. The operational creditor, same way, less than 25% of liquidation value or at least 25% of the liquidation value. Here again 1, 2 plus shareholder or partners 1. So put together, if you are going to calculate, the total number is going to be 50. Why we require this particular people? See, sometimes it is perfectly okay to discuss about the progress, whatever you are making in liquidation. And any decision, this people, if they are going to give you a decision more than 66%, you can consider this. My question clear to you is that you can only consider this decision will never bind you. Please be clear. This decision of this consultation committee will never bind you. Not like COC, whatever be the decision you are taking in COC binds you. Here, there is nothing is going to bind you. Please remember that. Number 2, this stakeholders consultation committee, why you are supposed to do that? If it is not going to be binding, there is always a possibility you may get a better results if you are going to discuss with your own creditors. That is the reason the stakeholders committee is compulsorily formed, and that has to be formed within 60 days, and members are 15. So 66% is the total number. It is not voting rate. Clear? This is the major difference between these two, you are going to make them as the member of the stakeholders committee. Clear? This is a latest addition. Please remember, any liquidator, they have to comply this particular and file the stakeholders consultation committee. You have to form it. If there are minutes of the stakeholders consultation committee on the progress report, if there is something you have conducted, you want to say, you are allowed to say. Other than this, if you ask me what are the other important provisions in the liquidation regulation, you have to read it completely once if you are a first time reader. If you are an insolvency professional who is in practice, please read powers, duties, secured creditors, because the one area of the insolvency professional, a challenging area is who is a secured creditor, and rank accordingly. If you recall, again, please read SR Steele's Supreme Court judgment, wherein you have to rank equally the same set of creditors, which means, say somebody is having a first charge, so they have to come in that particular line. Somebody is having a second charge, they have to be one step down. They are not ranking equally. Pari passu charge, first pari passu, all are charged equally. A consortium mostly having a pari passu charges. There is nothing called exclusive charge, but most of the areas they put it as an exclusive charge. We can consider this as a first charge because nobody was in the notion that there is going to be an IBC. So this is a lot of things generally the bankers have created. But if you ask me, is there anything called exclusive charge? Lot of charge creation documents have exclusive charge, but there is no such exclusive charge other than first charge and second charge. I will also stress upon few areas. This particular area on doing practical side, sometimes you will end up in some kind of a criticism, embarrassment, because in lot of cases I've seen secured financial creditors have say something around 40% and unsecured financial creditors are having 60%. In this case, what happens is the secured creditor wanted to go for a liquidation so that his amount is secured. If there is a resolution plan, unless and until he gets the comfort from the unsecured financial creditors, then only, because everybody knows for getting into resolution plan, 66% is a must. So the unsecured creditor will not opt for liquidation unless and until he waits for the resolution plan, wherein in CIRP process, both secured or unsecured financial creditors, they are coming in a group and they should be taken care. Again, if you look into SR Steele's, the Supreme Court very clearly says that rank. If resolution applicant wanted to give preference to secured creditor, the unsecured creditor cannot say that you have to give me the preference. Only thing is like he can simply will not vote for it, so it will never go into a resolution, it goes into liquidation. These are the practical side you have to remember, and I think I have covered most of the areas. If there is anything I have not covered, I'll certainly try to cover within 10 minutes when I'm going to take once again one more class in respect of rules, regulations, kind of this thing. With this, liquidation process is over. Now let us get into voluntary liquidation. Section 59 talks about voluntary liquidation. This is a very, very important area. Currently, lots and lots of voluntary liquidations are going on. All the 9 sections in the subsections in the voluntary liquidation area are very, very important. Out of 9 subsection, 6 subsections are 100% important, and examination point of view, at least 2 questions. On practical point of view, more areas you are supposed to cover, because I've seen today the position is lot of voluntary winding up is coming up, and in Companies Act you have a winding up chapter in your syllabus, And if you recall, part 2 of voluntary liquidation is completely omitted and entire voluntary liquidation is coming under IBC. So you have to go through only this thing. Here, you should remember certain areas under voluntary liquidation. The first primary thing for coming under IBC is default. What is the default amount? 1 crore. If the default amount is more than 1 crore, you can come under IBC as per the latest amendment. So if there is a default, then there should be a debt, there should be a claim. Okay, all these things they would have taken you during the first class. So in voluntary liquidation, the first condition is there is no default. And your assets are capable of taking care of the liabilities. If these conditions are satisfied, the company can voluntarily come forward and file an application under section 59. Okay, so the condition here is there is no default if the or otherwise the assets are sufficient enough to pay off the liabilities. If that is the case, and majority of the directors wanted to go for a voluntary liquidation and they are fully ascertained there are assets over liabilities or there is no default, they have to give a declaration, and from the date of declaration within 4 weeks they have to conduct a meeting, one through a special resolution, other through a ordinary resolution. What is a special resolution? If they want to go under special resolution, 3/4 of the majority. In ordinary resolution means if the company is formed for one particular purpose, say a special purpose vehicle, and that particular task is over, they can go for an ordinary resolution. Ordinary resolution is nothing but a simple majority. Clear? So if you go for it, accordingly, you have to file an application before NCLT regarding this. There is no specific application like section 10 what you have filed for the liquidation of a company. Section 59 is some procedure you are supposed to file, and you know pretty well if there is a special resolution you have to file MGT 14 before ROC, and you have to inform the ROC regarding this, like you are going for the entire voluntary liquidation that you are supposed to file along with the special resolution and EGM meeting, you have to proceed accordingly. The second stage here is, what is the second stage here is basically you are supposed to take creditors' permission. If there are creditors, because I told you already, there is no default and they want to close the company. 90% of the voluntary liquidation, if the assets are sufficient enough to pay back the liabilities, the creditors will automatically give you the permission, and this has to be done within 7 days of passing resolution. And immediately once you get the permission, it is the duty of you to notify ROC and the board. See, what has happened in most of the areas, we know if there is a resolution passed regarding this, we will file it with ROC. It is mandatory and the board is important. Both areas you are supposed to intimate regarding this. And once you finalize the entire this thing, you have completed, you have to file a final report and ask for a dissolution. And once the AA passes dissolution order, this has to be informed within 14 days to ROC. This is what the section 59 very clearly says. Whatever section 59 says, you have to follow methodologically and you have to do it in the appropriate instructions and appropriate compliances as per section 59. Now, again, for liquidation also regulation, voluntary liquidation also regulation. I will tell you the difference. If you note down if you are going to read it first time, read completely liquidation regulation process, then you go for at least one reading of voluntary liquidation, then you will see that both are one and the same, because in voluntary liquidation also, they have very clearly said you have to follow whatever has been stated from section 35 to 53 of the chapter 3. Chapter 3 is nothing but liquidation process. Okay, so what is 35 to 53 is nothing but you have to give a public announcement. Same kind of this thing, public announcement. You are supposed to get the submission of claims. You are supposed to verify, and you are supposed to accept or reject. If it is a reject AA, you are supposed to do that. That main difference is preliminary report. If you recall, preliminary report in liquidation, you are supposed to file it within 75 days to AA. Here in voluntary liquidation, it is 45 days from the liquidation commencement date, which is nothing but board resolution date, with a corporate person. Here you are not going to AA under any circumstances. It is only the final report dissolution only you are going. Other than that, you are not going to the adjudicating authority under any point of time. The public announcement, as usual, you are supposed to give it in the one vernacular paper, one English paper, where the registered office is located. All these conditions, whatever we have said, is applicable there, is applicable here. The only difference is that preliminary report. Now, let me ask you certain questions in this respect, because this is one area, you know what is a preliminary report. Preliminary report is nothing but it contains the capital structure, it contains the assets and liabilities on the liquidation commencement date, it contains about any inquiry is further possible. The fourth one is about when are you planning to complete. The general days to complete both voluntary liquidation and liquidation are 12 months from the date of liquidation commencement date. The maximum time allowed is 12 months, which if you want to go beyond 12 months, you have to write to AA and move an application, get the permission from the AA. This is very, very important. Okay. And another difference in liquidation and voluntary liquidation. Preliminary report, 45 days. Sorry, 75 days. 75 days, 45 days. Asset memorandum report, progress report, asset sale report. Or here is no such report. Here there is something called annual status report. This has to be filed on or before 12 months. Once you complete the job, there is no such report here. And if you recall forms, okay, here you will file it in schedule 2. Here you will file it in schedule 1. Okay, so schedule 2 and forms are accordingly. Say for example, public announcement, if you are going to do it, form B. Here you are supposed to do it in form A. Rest of the forms will be like that only in that area. These are the main differences if you are going to look into it in respect of voluntary liquidation regulation and liquidation regulation. One final area, there is something called final report. Once you complete everything, you are supposed to give the final report. Here you are going to give the final report to AA. Here you are going to give the final report to the board and registrar. If you read regulation 38, this will be there in voluntary liquidation. Here this will be silent. So this is another examination and also practical area where here it is very clearly stated there. And if you recall, dissolution, you are supposed to file with the ROC here within 7 days. Here it is 14 days. These are the differences, and rest of the regulations are one and the same. First time readers, please read it completely, then have this chart, try to assimilate so that you will save time. People who are in practice, please remember, You have to follow immensely because this 75 days is AA. Here it is a corporate person, which means board of directors because it is not diluted. So you are supposed to give it to the board about your preliminary report. What are your views and other things? Other than that, everything is one and the same. And in voluntary liquidation, section 59, very, very important because on examination point of view, a lot of questions will come over there. Practical side, currently the trend is lot of companies want to go for a voluntary liquidation. There is a checklist available. Please follow the checklist. Accordingly, you go and close the voluntary liquidation case. See, most of the areas this can be, you need not wait for 12 months. You can close it within 5 months. This is very, very easy because you know pretty well by looking into the balance sheet itself whether the assets over liability is there, whether you will be capable of closing it, you will be able to do it. So this is about voluntary liquidation. If there is any queries, please note it. I will certainly take all your, clarify all your doubts accordingly. See, in part 2, there are 7 chapters, which is preliminary. Chapter 2 is CIRP. Chapter 3 is liquidation. Chapter 4 is fresh start process, which I think, sorry, not fresh start, it's a fast track process. I think nobody has taken it and tried to cover it. And the fourth one is first, second, third, fourth, and fifth one is voluntary liquidation, then administration, fifth, sixth, and final offenses and penalties is the 7th chapter. So we have been covered all this area. Now I will take fast track process and let us touch upon administration and other areas. These offenses and penalties are very, very important. This takes minimum 5 minutes. Since you have covered all this area, this is a very important area. Maximum, if you are going to concentrate with me, 5 minutes, I will teach you these offenses and penalties, then it becomes a cakewalk for you. Okay, now let's come to this fast track process. Who are the people eligible for fast track process? The people eligible for the fast track process are only 3 people. Assets less than 1 crore, startup company. See, if you know that there are only 3 categories of people are eligible: startup company, and total assets are less than 1 crore, and the third one is a small company. As per the Companies Act, these are the 3 people are eligible to file under fast track. As the name indicates, if you recall, CIRP process is 180 days, fast track is 90 days. And in CIRP process, the extension is 90 days. Here extension is 45 days. Okay, in CIRP process, if you recall, 14 days is the submission of claims. Here in fast track process, 10 days is the submission of claims. And COC constitution is 23rd day. In fast track, it is 21st day. Okay, and I think you will be able to follow all these things. And if there is any issue, you can very well tell me. I will help you to sort this out, because this is important provision. You should be certainly understand it. Okay, and if you recall, again, registered valuer for a CIRP process is 2 registered valuers of the each class of assets. Here 1 registered valuer is sufficient. Okay, and notice of the meeting. If you recall, first meeting notice 7 days, subsequent meetings are 5 days. Here in fast track, it is all these things are 7 days. And COC, if you recall, COCs, most of the areas, there are 3 kind of a permission. One is 90% under withdrawal. The second voting right is 66%. Certain areas like change of RP, approval of the resolution plan, extension of time. And if there are certain areas wherein under section 28 of the CIRP, approval of the committee of creditors are required, those areas are 61%. And if you recall section 21 subsection 8, other areas, say if you want to appoint a forensic auditor, you have to get the approval of the 51% of the creditors. These are the COC's voting rights. In respect of fast track, all these things are 75%. Okay, these are the major differences if you understand between fast track process and the same sequence of the flow chart. If you are going to put in, this is sufficient because both are one and the same and flow is one and the same, only days are different. So let me repeat once again the difference between fast track process and CIRP process. The total moratorium period here is 180 days, here it is 90 days. The extension period with the 66% of committee of creditors approval is for maximum 90 days only once. Here it is 75% of 45 days only once. The submission of claim is 14 days in CIRP. In fast track process, it is 10 days. And constitution of the committee of creditors, here it happens on the 23rd day. Here it is happened on the 21st day. The registered valuer here will be appointed 2 of each class of assets. Here it is only 1 registered valuer. The notice of the meeting of the CIRP, first COC meeting is 7 days. Subsequent COC meetings are 5 days. Here in fast track process, all are 7 days. And COC voting rights 90% in respect of withdrawal of an application under section 12A. 66% on certain areas specified in the code, those areas 66%. All other areas 51%. Here flat 75%. If you understand, this is sufficient for you to understand the regulations and also flow of the entire fast track process. Now let's get into the other area, important area is, give me a minute. So this is about fast track process. Now let's get into the adjudicating authority area. This is also very important. Who is an adjudicating authority here in CI corporate? It is NCLT. For individuals and partnership, you know, adjudicating authority is DRT. Okay, there are certain areas the adjudicating authority passes an order and the suspended director or you want to go for an appeal. If you want to go for an appeal, the time for the appeal is 30 days and the forum here is NCLAT. And if there are sufficient causes wherein you are unable to file within 30 days, another 15 days is allowed. Provided if you show the sufficient cause why you are unable to file within 30 days. And NCLT is also passed an order. You don't want to, you want to go once again appeal, you can straight away file to Supreme Court. The time limit is 45 days and sufficient cause, then 15 days is allowed. Same way here, DRT to DRAT, DRAT to Supreme Court, 30, 45, sufficient cost 15 days, sufficient cost 15 days. Okay, so technically NCLT is the first appeal, NCLT is the adjudicating authority. First appeal you will be filing with NCLAT, and the second appeal and final appeal you are going to take it to Supreme Court. And if you recall, civil court does not have a jurisdiction both for CIRP as well as for individuals. Please remember it. This is a very important area. Okay, now let's go to one more area which is important, is a expeditious petition. Now, you are in NCLT and you have filed an application. Generally, this has to be maximum time. It goes 30 days kind of a thing. Within 30 days, certainly your application NCLAT will be taken care. But something went wrong, your application has not yet come. You can file an application before then under this 64 section, and moment you are file an application, if the application shows the genuine reason, the court will pass within 10 days. This application has to be addressed. So any expeditious petition within 10 days, this has to be addressed. Both, this is applicable both in corporates as well as individuals and partnership. Now, there is one important area, another avoidance transaction coming under section 66. I said PUF. PUF is preferential, undervalued, fraudulent, and E is extortionate. You know, this is section 43, this is 45, extortionate 50, 66. All these area, a duty of the resolution professional and liquidator has to file an application, ensure that a proper justice is going to be given to the creditors who has believed and given their money. So on which I have covered you PUF, I have told you undervalued, I have told you extortionate, I have left section 56. So section 56 talks about fraudulent transaction. Most of us will file an application under section 66 because no look back period. Any transaction done during CIRP or in liquidation wherein you feel that there is an element of defrauding the creditors, then you are supposed to file an application under section 66. How do you do it? Is basically the loan is received in the year 2013 and application is admitted in the year 2019. The loan has been somewhat, let us say, has been diverted or siphoned in the year 2015. Look back period, if you recall, for preferential, undervalued, extortionate, all the cases are 2 years for related party. Extortionate is only 2 years. Both preferential and undervalued, related party 2 years look back period, and unrelated party is 1 year. So this is the only provision you can file if any money has been taken by the suspended directors or officer of the company or key managerial persons. You can file an application under section 66 and your order will come under 67. Okay, and this is one area, 99% of all the companies, if you are going to look into it, they are one way or other siphon the funds under this particular clause, and we are filing an application under section 66. I already told you the purpose of 43 is different, purpose of 45 is different, purpose of 50 is different, 66 is different. You are supposed to file each and every application according to that nature of the application under different heads. This is important. Now let's go to the final area, offences and penalties. This is one important area wherein it is, if you are going to understand, this is going to be very easy. Okay, now let's get into the subject. What is the first step you are going to do in the entire IBC? The first step you are going to do is filing an application. Who are the people can file an application? A financial creditor, an operational creditor, and a corporate debtor themselves. Remember section 7, 9, 10. Sometimes 59 will also come, but rarest rare case, but it is generally, this is how this goes. If it is going to be information filed, application filed by the financial creditor, and he has done it some kind of a purposeful way, and there is no imprisonment for financial creditor. However, the fine is going to be minimum 1 lakh, maximum 1 crore. If it is an operational creditor, do you recall there is a dispute between the operational creditor and the financial creditor, and operational creditor has not disclosed the dispute. Again, there is an imprisonment which very clearly says that the imprisonment is going to be 1 year, minimum 1 year, maximum 5 years. And along with that, fine minimum 1 lakh, maximum 1 crore, or with both. Okay. In CD, except 2 cases, all other cases, if it is a CD, you immediately put minimum imprisonment is 3 years, maximum imprisonment is 5 years, minimum is 1 lakh, maximum is 3 lakhs. Sorry, maximum is 1 crore. Okay, except 2 areas, wherever the CD is going to do false information in application, whatever is going to do that, it is your duty that, please remember, wherever the CD is going to come, you have to have a thumb rule this very clearly. These are as per section 77, 76, 75. I have a purpose of teaching you in a reverse order, because in the book, I'm just going to come backwards so that all the processes, whatever you have done, you will be able to understand. So the first thing in IBC you are going to do is file an application. Once you file an application, a financial creditor has to disclose properly about the default amount. And if he is going to do it improper or with the intention to do some kind of injustice, he is the adjudicating authority. There is no imprisonment for the financial creditor, can put a fine, a minimum of 1 lakh, maximum of 1 crore. In respect of the operational creditors, it is the mandatory duty of the operational creditor to disclose the dispute, if any, and later on it has been found out by the adjudicating authority. A minimum is 1 year imprisonment, maximum is 5 years, and minimum fine is 1 lakh, maximum is 1 crore. In respect of CD, again, maliciously, if he is going to file to escape something, and if it is being found out by the adjudicating authority, minimum 3 years, maximum 5 years, minimum 1 lakh, maximum 1 crore. Now, having understood this, let's go back to the next section, section 74. This is again divided into 2 parts. One is on moratorium. The another one is in respect of resolution plan. Again, in moratorium, corporate debtor is going to disturb the moratorium or any other person. Here, resolution plan, any person who is going to violate during this resolution plan. Corporate debtor, I told you, thumb rule, minimum 3 years, maximum 5 years, minimum 1 lakh, maximum 1 crore. Here, the first exception is instead of 1 crore, here they have stated as a 3 lakhs. If the corporate debtor is going to contravene the moratorium, he will be able to punish with the minimum imprisonment of 3 years, maximum imprisonment of 5 years, or with the fine of 1 lakh, or with the fine maximum of 3 lakhs, and or both are allowed. If any other person, minimum 1 year, maximum 5 years, and minimum 1 lakh, maximum 3 lakhs, sorry, 1 crore. Okay, this is the for any other person. Same way, if it is a resolution plan is contravened by any person, again it is going to be minimum 1 year, maximum 3 years, and fine is going to be minimum 1 lakh, maximum 1 crore. First time readers, please read the entire section once and follow this rule, then it will be easy. But compulsorily you are supposed to read. This is talking about section 74. So this is about the moratorium, this is about the resolution plan. Contravention by the CD, contravention by any other person other than CD. So now, having completed this, let us go back to section 71, 72, 73. It talks about, first 71 talks about falsification of books. 72 talks about willful and material omission. Willful and material omission. And 73 talks about false representation. All these things are done by the CD. I told you, wherever CD, except 2 areas, immensely you see the CD, immediately you can think minimum 3 years, maximum 5 years, minimum fine 1 lakh, maximum fine 1 crore. All the 3 sections talks about falsification of books by the CD, willful and material omission from the statement of affairs of the CD, and punishment for false representation to the creditors. All the areas it goes with the CD immediately. The moment CD, the thumb rule is minimum 3 years, maximum 5 years, minimum 1 lakh, maximum 1 crore. Okay, now let's go to the next section, section 70. This is a very important section. This is about CIRP process. CIRP process, who are the 2 people involved? CD, another one is RP. Okay, see, the moment people wanted to do RP, please remember, if you do any kind of if you contravene any of the provisions, you are punishable with the imprisonment subject to the maximum of 6 months with the fine minimum 1 lakh, maximum 5 lakhs. Please remember, under any circumstances, RP, if you want to become RP and if you contravene anything, please ensure you will be definitely go with the problem of 6 months imprisonment and a minimum fine of 1 lakh, maximum fine of 5 lakhs. This is what is there also in respect of offences and penalties of the bankruptcy, wherein if the RP does a problem, the same punishment you would have seen it in individuals and partnership firm. In respect of CD, I told you the thumb rule, minimum 3 years, maximum 5 years, and imprisonment, fine, minimum 1 lakh, maximum 1 crore. This is section 70 CIRP process. When there is a CIRP process is going on, any contravention done by the CD or an RP, you can very well ask for these kind of punishments. Clear? Now let's go to section 69. Section 69 talks about CD. There is a defrauding of creditors. Whenever there is a CD, there are, I told you, thumb rule, 3 years to 5 years, 1 lakh to 1 crore. Here, I told you one exception. During moratorium, it is 1 lakh to 3 lakhs. Same way, defrauding of the creditors, this 3 years has come down to 1 year to 5 years. This is the second exception. In respect of the CD, there are only 2 exceptional areas. One is during moratorium Another one is during the defrauding of the creditors. Okay, section 68. Section 68 talks about concealment of property. Whenever there is a concealment of property, you please remember again, who will do this concealment? None other than CD. And the property value should be greater than 10,000 rupees. And this would have been done within the period of 12 months. If these conditions are there, concealment of property, the CD is punishable with the imprisonment. CD, always minimum 3 years, maximum 5 years. Minimum 1 lakh, maximum 1 crore. That's it. You have finished the entire portion of CIRP part 2 with everything. We have been covered preliminary, we have been covered CIRP process, we have been covered liquidation process, we have been covered fast track process, we have been covered voluntary liquidation process, we have covered adjudicating authorities responsibility, and we have covered offences and penalties. Offences and penalties play a very, very vital role unless and until you understand and put it appropriately, you will be capable of certainly a comfortable position. But if you recall, these offences and penalties should be related with a section called 236. This offences and penalties should be read along with the section 236 of the Act. It very clearly says that this can be tried by a special court established under chapter 28 of the Companies Act. So any offences and penalties, if you ask me whether NCLT is having a direction, NCLT will direct only to the special court. So wherever offences and penalties of the CIRP, please remember this is transferred as per section 236, and this is covered by special court under chapter 28 of the Companies Act 2013. Okay, these are the important areas in respect of the CIRP process. Okay, there are other areas which I feel or let's take question answer session, and there are certain areas on a final level. I'll take final 10 minutes to recap everything. If there are any questions, please feel free to ask me. That is a one way or other, either learner or an insolvency professional. I just want to give you 10 minutes time so that anybody can ask me questions on any area of the entire IBC. I'll be here to help you out.
Oh, Madam, there are 3 questions in Q&A.
Okay.
Apart from SR Steels, what is the second case law? Can you please quote the case law name?
Swiss ribbons is Swiss ribbons you are supposed to know, because in Swiss ribbons, resolution professionals are only called as an administrators, whereas in respect of liquidators, they have been called as adjudicators. Administrators, they cannot reject any application. Adjudicator has got a right to reject an application. The recovery of dues and other things are 99% belonging to the adjudicator because he is deciding authority. Here, administrator is collating, collecting the claims. So that is the another important. Lot of case laws are there, but certain case laws like if the timeline comes, there are 2 important case laws. One is JK Jute, wherein like it has gone up to NCLT, wherein it says that the 14 days of the adjudicating authority, initially it was mandatory, then they said it as a directive. And the 7 days deficiency to clear if there is any deficiency in the document, the NCLAT said that is mandatory. Supreme Court says it is directory, provided you have to give the sufficient cost. The second is SR Steels. Okay, and in respect of, I could not find section 49, there is not a look back period. Can you please guide me in this regulation? That's what I said. If you look into section 45, there is certainly a look back period. If there is a related party transaction, the look back period is 2 years. If there is an unrelated transaction, the look back period is 1 year. But in respect of section 49, which is more specific, talking about the transaction which is significantly less than the transaction provided by the corporate debtor, there is a defrauding of creditors happening on the undervalued transaction. There is no look back period. So you can take advantage of the situation if there is an undervalued transaction which is significantly. Please remember, this look back period, no look back period under section 49, read with 45 subsection 2. Okay. Please put some light on application filed under section 49, vis-a-vis section 66. See, section 49 very clearly says only about the undervalued transactions relating with 45 subsection 2. Whereas in respect of the defrauding creditors, it is not only undervalued. There are so many transactions in section 60C. Say, for example, there is one creditor who has withdrawn the money from the suspended director, who has withdrawn the money from the company and he has not paid back. This need not be an undervalued transaction. This is 100% a defrauding of creditors. So when there is a defrauding of creditors, you are supposed to file only under section 66, not under 49. The basic premise of 49 is an undervalued transaction. Whereas 66 not only covered undervalued transaction, it covered all the transactions of the corporate debtor. Okay, in the case of liquidation, how going concern concept can be applied? In the case of going concern section 2, regulation 2B, wherein somebody wanted to give a compromise on arrangement through a scheme under section 230 of the Companies Act. That particular scheme is a refined form of a resolution plan. It is a refined form of a resolution plan where it has to be approved by the 75% of the secured creditors, and also stakeholders consultation committee should also approve 66%. Accordingly, this company can be sold as a going concern under liquidation. This is one of the special enactment because the corporate debt is not everybody wanted. Everybody wanted the company should run, the company should revive, the company should give an economic value. The company has to run and it has to give lot of potentials for the people in and around. Under these circumstances, nobody wants. The preamble of IBC is revival of the company. It is not corporate debt. So if there is somebody who wanted to give a scheme, would like to take it over as a going concern, this is allowed. And there are a lot of case laws in this respect. S.C. Shekaran, if you look, explained very clearly by NCLAT. Is there any penalty for operational creditor contravening the direction under section of NCLT? Which section of NCLT, I do not know. If there are two sections, I will tell you. The section is, the first section, if the application is put by operational creditor under section 9 and the court is giving you the direction to pay the IRP, the cost is 2 lakh of rupees and operational creditor not interested to pay. You don't have any choice. The moment your name is going to be appear, you are supposed to issue the public announcement and file an application before the NCLT under section 60 subsection 5 subclause C, wherein if there is any kind of the proceedings which has been during which you require any direction from the adjudicating authority, you can very well file it and get your money through the adjudicating authority. That is one thing. Any penalty for operational creditor, if they are not going to disclose as per section 76 of the Act, there is a dispute between operational creditor vis-a-vis the corporate debtor, and he has definitely hidden that matter. If this has come to the light of the adjudicating authority, yes, he is punishable with the minimum imprisonment of 1 year with the maximum of 5 years, minimum punishment of 1 lakh of rupees subject to the maximum of 1 crore of rupees. These are the only areas where the operational creditors is punished. Other than that, poor operational creditors, let me tell you, unless the company is a going concern, whatever the cost he is going to incur, that is going to be real problem. Any corporate debtor punished under section 66 till date in any company? This is a good question. I told you, if you recall, section 236 of the IBC very clearly says that any offences and penalties should be tried only in the special court, not with them. There will be a direction to file it before the special court. And there are certain seminars wherein we have attended. IBBI very clearly said, if you find there are applications like I told you, 75th day, you are supposed to form an opinion in CIRP. Accordingly, you are supposed to file on or before 115th day with the board. Board will take appropriate action. It will direct to SFIO or any other person, because if you recall in CIRP forms, if there are any kind of a violations, you will be certainly, they will take care of it and you are supposed to write. Okay, what kind of a violations are possible? I'll tell you with my experience. There are a lot of violations with the Companies Act. In one of my case, there is 2014 accounts wherein this particular financial creditor, lot of financial creditors have given like 5 crores, 10 crores, 15 crores, kind of a this thing. And there are other creditors who have also given the money, they have also received the interest towards it. And once this company went into went into CIRP, I released the advertisement and I received the various applications from C in respect of all the creditors. When I looked into the application, there is the balance sheet which very clearly says 10 crore rupees as given by X. Who is this X? This X is a person who is nowhere related with the company. X, basically my company is a private limited company. If X has given, if you look into private limited company acceptance of deposit rules, private limited companies cannot accept deposit other than its shareholders, other than its directors, relative of the directors, shareholders, where there are, if it is a shareholder and relative of shareholder, there are restrictions. You can collect the money easily from the financial institution, you can collect the intercorporate deposits, but you cannot collect it from a third party. This itself is a violation. But this particular company has done violation in this respect, and they wanted me to accept them as a COC member. During that time, Swiss Ribbon's case has come. So I don't, being a resolution professional, I don't have a right to reject. So I just asked them about the substantiation. They have sent substantiation by sending me the agreement, which is a new agreement, which I'm able to see that. And that agreement was prepared on the day, but it was prepared at the relevant point of time, but it's a new agreement. Since I asked them, you have to substantiate. Still, I don't want to accept it. So they have filed a case against me before the adjudicating authority. The adjudicating authority on the date of the case, he said, why you want to do like this? Now I give you the permission, either you accept or reject the application. Then I rejected 95% of the application for the simple reason, I told them I cannot accept you as the committee of creditors. And I've given them an explanation. As per section 128 of the Companies Act, any accounts should be, books of accounts should be reflect true and fair view, and it should have accrual, it should follow the accrual concept and double accounting system. What do you mean by accrual? If there is an interest, that interest should have been accrued and reflected in my books of accounts. There is no reflection of interest in my books of accounts. I have rejected your claim and I don't want to go further and take you as the financial COC financial creditor. Fortunately, that particular corporate debtor, by seeing my attachment with the Companies Act and violation, he decided to withdraw and he settled the persons. I came out. But why I'm saying, these are the important areas. if you are going to take decision, that decision should be substantiated with the legal position. In the meantime, even though I took time to reject, immediately the letter has gone to, like, grievances have gone to IBBI. IBBI has sent me a show cause notice. The moment you receive a show cause notice from IBBI, your life will be somewhat not comfortable. You will never get a sleep because so far nobody has sent you a show cause notice. But this is one area you please mentally prepare. If you are going to reject or if you are going to do anything, 99% you will receive a show cause notice. Then I explained to IBBI why I have rejected, why I have taken that stand. Okay, then I received a call from IBBA. Then I explained the Companies Act. Accordingly, I have taken a decision. So, since there is a violation under the Companies Act, nobody can do anything. These kind of decisions, because of our experience in this field, we will be able to do it, and we have to take certain kind of a calls based on our experience. That's why I really appreciate this 10 years of experience in this particular level of knowledge. And especially since I'm a triplet, I can certainly say that audit is our core area. Compliance, we are very, very poor. In respect of cost, I will say that they will work and understand the cost of production in that particular product. But if you are going to have a team of professionals, then it is going to be easy task for you to do the entire this thing, and you should also have a proper supportive legal team to proceed further. In my case, when I received the show cause notices from the IBBI, I immediately went to an advocate. I have told, before doing everything, I have discussed with the advocate. I know pretty well this is going to be a problem, but I never expected. Every day I received one show cause notice because I rejected something around 22 applications. And every applicant aggrieved by my action, they have immediately filed their grievances. My part is very easy, cut paste copy, only change the particular financial creditor's name because everybody is an outsider. This is a subjective call. I'm not saying whatever I have done, you should do it. It is a subjective call. I have taken a calculated call because I feel that if I allow them to be the COC, they will be certainly doing or make me to do certain things because still in CIRP, your RP confirmation depends upon the COC 66%. You have to do certain job, certain area of job, you require liberty. If the COC is going to intervene, you will not be able to do your job fully justified. More than that, in COC meetings, 90% of the COC members, this is my personal feeling, they do not know anything about IBC. First meeting, I have seen it, the person, COC member who is attending first time IBC COC meeting, he will ask when I'll get my money back. Am I their staff to answer them? I'm only a professional appointed by I'm a court officer appointed by the court. I should do my fiduciary duty. I don't have any kind of a priority either over COC nor over the nor over the corporate debtor. I'm in a fiduciary position. Why I'm saying all these things to you is basically, this is one area you will certainly learn all these things and you should be tough certain stands. In one of my case, one of the leading bank wanted me to give them the valuation report. I told them I will not give the valuation report. The valuation report can be shared only at the time of resolution plan, not before that. This is very clearly stated in the regulation. He said that RP has given, that RP has given, you have not given. I said if that RP is given, is his prerogative. My prerogative, I'll go by the rule book. Certain areas you are supposed to do that, and then only you will definitely stand above all others. So the next question is, can an RP accept claims even after finalizing IM and RFRP? Please clarify. Yes. As per the case laws, I forget the case law, somehow I'll tell you during my next class. Before the resolution plan is approved, you can take the case law, accordingly you can approve it. On the other hand, you can also reject because during CIRP only 2 periods are given. Minimum is 14 days as per regulation 12, minimum is 14 days, maximum is 90 days. Even if you reject, quoting it very clearly, there is nothing wrong. But why hassles? If it is going to be a resolution plan is yet to come, you can share that particular claim and you can intimate the PRA and also record in the minutes that this particular claim I have taken based on this ironclad decision, I want to admit it. Go ahead and do that. Even if you are going to reject, no problem, he will go to the AA, you have to go to the court, stand before AA, get the blessings, admit his claim. Whether to check the Limitation Act at the time of verification of claim during the IRP period. See, by the recent judgment of the Supreme Court, very clearly says, initial judgment, Article 137, very clearly, BK Educational Trust, very clearly says, all the applications and other things as per 137, Limitation Act applies, and anything beyond 3 years, you need not do anything. But there are two recent judgments. One recent judgment by Supreme Court by Justice Indra Banerjee very clearly said, if there is a continuation of delay application along with that claim form, you can very well ignore the Limitation Act. The second thing, if something is there in the balance sheet and you are convinced that it is there in the balance sheet, you can very well admit it. This is your subjective and conscionable call. You need not go by anything other than your conscience. If your conscience says that you can go back and do that, please go back and do that. There's nothing wrong in it. Is there any other question, sir?
No, madam.
Okay. If the claim is received and the NCLT told to admit after submission of resolution plan, how to do distribution as plan is already submitted before acceptance of claim, and applicant is not provided any amount to claimant as there is no claim during the period when they are submitting the resolution plan. See, actually this has been overruled currently by the recent Supreme Court case held on 13/4, wherein if the resolution plan is approved by AA, all other claims are extinguished. Okay, once the resolution plan is approved by COC and it has been presented before AA and there is no scope, you have to leave everything as it is where it is. Okay, so with this, because I've seen a lot of people wanted to go because of the curfew, I would like to close this. And what happens to the personal liability of the promoters once the CIRP is over? This is again, personal guarantors, individuals and personal guarantors have come up. There are lots of scope for the personal guarantee area because whatever they cannot do it in CIRP, they are putting the case. If you recall, 60 subsection 2 very clearly says who are the personal guarantors, whom will be the personal guarantors during the CIRP or liquidation process. They can certainly file an application before NCLT, and NCLT will immediately admit because there is a process in CIRP. There will be another person who is going to be there. So both of you will put together, ensure that the maximization of the assets realization will happen. There is a very good scope for personal guarantee. Under 66, the look back period is unlimited. See, generally it is unlimited, but you know the Companies Act very clearly says that you are supposed to keep the books of accounts only for the period of 8 years. You cannot go to unlimited period. The person is going to have 8 years. But unfortunately, the practical side, you will take up this 8 years or 4 years only from the MCA record. Nothing will be available with the particular corporate data. It is a MCA record. You have to rely on it, and you have to take the bank account from the respective bankers to analyze for the avoidance transaction. Okay, other than that, unlimited is not the right word. It is limited with 8 years, but unlimited because the other areas very clearly say the look back period is 2 years. Especially section 66 and 49 is silent about this. So we are taking advantage of this particular situation. Okay, more scope with more responsibility can really give new start to MSME if everything goes well. Yes, but there is one biggest problem. MSME is coming at before after CIRP. No, after fresh start process, this particular chapter has been introduced. No, after liquidation, this particular chapter has been introduced. But there is one area I am not very clear. While you submit the claim, by the MSME, they are supposed to give the one declaration wherein they have to give the declaration that there is no avoidance transaction in this particular case. See, 90% how they can give a declaration like that is $1 million question. That is the only point we are unable to catch. But if somebody is going to say that yes, there is a avoidance transaction wherein I have taken 5 crores out of the company, he has to bring back that 5 crores to approve this particular plan. Other than that, there are around 300,000 companies, MSME companies. There are only less than 5,000 insolvency professional. Scope is unlimited. But again, these kind of MSMEs are, most of the MSMEs are with the big banks, where there is a empanelment. They will give you only for the empaneled people. They will not give it to the ordinary people. So if you are planning to get empanelment with those banks, the scopes are very high. As on date, please use this as the greatest advantage and clear the exam, and also try to pitch more kind of cases, because I have seen lot of MSMEs are coming forward, but one hitch is this avoidance transaction declaration. You are supposed to look into the avoidance transaction liquidation transactions. If there is an avoidance transaction, how they are going to address it, I really do not know. This is one area, is a gray area. Other than that, huge scope is there.
Thank you, madam. So, really excellent presentation, madam. It's always a great insight and value addition to hear you. And I request Naresh Chandra Gilli, sir, Regional Council Member, Chairman of SARC, to give you closing remarks.
Chairman and CA Anita, madam, and all the members. In fact, I've been glued to this program, this today's session, and madam has been giving an excellent presentation, extempore, and with so much of detail, linkage, and explaining with practical experience. I think, madam, today we had a great session, and your presentation was excellent. I'm sure all the members would try to go through the presentation and all your recordings, all your presentation on the board. So I think we'll try to review it again and again, because a lot of beautiful explanation and linkages also was excellent. I'm sure it will help us a lot in our preparation for exam. It in fact motivates that we should start our preparation right away and try to finish it the next 15-20 days, 1 month. Thank you very much for being here and sharing your excellent experience and knowledge to all of us, madam. Thank you very much. Thank you, Chairman.
Thank you very much. I wish you very good luck. See you on Monday. Any clarification on anything, there is a group you have already found. Whatever the clarification you require, you can put in the group. Whenever we have time, I'll certainly reply to you. I wish you very, very good luck. Thank you very much.
Thank you, madam. Thank you.
Thank you, madam.
Thank you, madam.
Thanks a lot. And we look forward to your continued support for Hyderabad branch. And Ramkumar, I request you to please share the virtual certificate of appreciation. As a token of thanks, we from Hyderabad branch of SARC, the small presentation is virtual certificate of appreciation. And
thank you. Thank you very much. This makes me very happy.
Once everything is settled down, we'll frame it and send to you the physical address, ma'am. I request you to kindly accept our physical virtual certificate.
Thank you very much. I really appreciate this. Thank you very much.
Thank you, ma'am. Thank you so much, ma'am.
Yeah.
Madam, presentation, without presentation, our session is really, really wonderful, madam, the way we have taken up the session.
Thank you.